let's go finish off with something that was really in vogue up until probably a couple of weeks ago, gold. Now, when we saw Russia go and invade Ukraine, we saw that big rally, and it was a double top on the daily chart. And all of a sudden, the gold price has been sliding ever since. When do we get back in, or do we just go and sell now and take what we have left?
Yeah, look, I've got a classic chart set up for you, Scuddy. It's it's one of the most exciting charts I've seen in gold for quite a while, and it's it's got the best asymmetric risk reward profile that one of the best asymmetric risk reward profiles that I've seen for a bit. And now there's a bit going on this chart. I usually keep the charts quite simple and focus on one thing, but there's a few things to sort of point out on this. So let's just break it all down. So first up, we've got the breakout from that big 12-month trading range. That was about 6 weeks ago, and that's when all the Ukraine stuff really started to happen. And this was significant because it's the first time we've seen sustained upward momentum in the gold price since around mid-2020. And now the second key thing is what you mentioned just previously. It's about the retest of that 2020 high, and that's resulted in that double top, where you can see the blue shaded line at the top of the chart. Now, as I said before when we were talking about the ASX 200, a lot of people hear double top and think, well, that's got to be bad, but it all depends on what happens below the top. So sometimes it can be part of a big topping out process, which is continues to fall away. But at other times, and that's what I think we could be doing at the moment, it becomes the market comes back, it stabilizes, and that becomes a staging post for higher levels. And I think that's what we could be doing now. And the best part of this is that it's a really favorable risk reward setup. So I'll come back to that part in a moment. But just first, just look at the shaded area, just where the price is now. I put the Fibonacci retracements on from the January low through to the recent high. And so it was just this week, the market's come back to the 61.8% retracement and bounced. That also coincides with the 50-day moving average, which you can see that's the red line just beneath the price action. And so look, for the people who like to buy the dip, this is one of those times. This is where you buy the dip. This is your classic buy the dip opportunity. So the trade I see here is you could buy gold at current levels with a tight stop. So for an aggressive play, you could just use this week's low point, which is about 2.5% below the market. Or you could give it a bit more room, maybe 4 to 5%, which is probably what I'd prefer to do. Either way, I think it's a relatively low risk play with a lot of upside should this rally resume and we start to move up to those all-time highs and then punch above. Look, my biggest concern with this whole gold play over the course of the last couple of months has been that it's been catalyst driven. It's been driven by what's been going on in Ukraine. I prefer breakouts where you kind of don't know why they're breaking out until you look back later on. But if gold, this is where it's make or break for gold. If gold can hold its footing at these levels and then start to regain that momentum, well, then I think it could be game on, and this could be what the gold bulls have been waiting for the last 18 months for. That said, you've got to have your risk management around this, and that's why I give those potential exit levels, because if this has been a catalyst-driven breakout, catalyst-driven breakouts can quickly crumble. So this is why we're at this key junction now. Risk reward is great, so I think you play it from the long side. But you've got your escape route should it not start panning out. So look, it's all that flexibility in these these opportunities. And look, just lastly, I've also been getting lots of buy signals for gold stocks in the last few weeks. And so look, I think it's shaping up as a super interesting play over the next. It could be over the next few months. It could be over the rest of this year if this rally can really take hold.